Okay, so we're recording now. So guys, this is really excited about tonight. What we plan on doing, and I want to do some expectation setting. Um, every Monday when we meet, and we're going to meet at 8 o'clock Eastern. What I want to break the what we talk about in really kind of three sections. So we want to talk about some things that are theoretical to trading, just some theory, and it may not even be about charts. It may be about mentality. It may be about just some things that are kind of ancillary that connect with trading that are critical components. We will talk about, we will do something theoretical, we'll do something technical, and then we're going to open the last third of our sessions for question and answer. Okay. So that way, so if you hear anything, if you would write it down, so that we can revisit that, because we want to go on a kind of concise schedule. I want to talk about some theory. I want to talk about some technical things, and then I want to, within that technical, I want to show you some setups and some things that we're doing while we're doing it, some new things that I may be testing out, things of that nature, to get your feedback, and then we'll have Q&A at the end. Okay. So the first thing I want to talk to you all about is, in using this system, you know, the blessing and the curse of simplicity system is that it can be totally customizable. Okay. That can be a blessing and a curse, because that means people can be as wild as they want to or as conservative as they want to. So that creates the need for concise and tight rules to which we execute our pattern of what we do. Okay. The success of trading is being systematic. Okay. I don't know whether you realize or not, but if you watch the charts any amount of time, you realize that the trading world is just a computer algorithm. It has patterns. It does the same thing a lot of times at the same time on the same day. Okay. And so that's when I always encourage people to don't be so close in on the charts, draw back, and so you can see the patterns. I'll show you tonight how to put day separators up so that you can see, oh, this is happening every Wednesday at the same time. Literally, y'all, there are things that happen at the same time on the same day of every week. Okay. And when you learn that pattern, then things don't seem so random. And a lot of times when we're on lower time frames and all those things seem like, man, I don't realize what's happening. But if you just look, stand back, and I'm glad to hear majority of everybody, if not everyone, is in demo. Okay. You're not as emotionally attached. Okay. So I want you to kind of start looking, not getting in and trading all the time, but just sit and just watch your opponent. I'll say this. One of the people that I listen to, Roger Banks, he talked about the African crocodile. Okay. And he was watching, I think, National Geographic or something like that. He talked about that the African crocodile will stay underwater with just his eyes up for like 10 to 14 days, where he's blended into the water, watching, let's say, like an antelope, like a group of antelope will come and they'll get some water by the brook or whatever like that. The African alligator will sit there with patience and watch how the antelope move, how many of them come, how long they stay there. And at the end, when he finishes studying the moves and the methods of the antelope, when he gets hungry, he'll get close to where they come and he'll strike. And the reason he was able to strike and be successful, he doesn't get all of them, but there's always an unlucky one, right? The one that stays behind, the last one to get a drink of water. He's able to do that not because he's so big and bad, because he stayed and he waited and he studied his prey. He studied his prey. And guess what? When that alligator eats, he eats the thing whole and he can feed off of it up to 21 days. Y'all see what I'm saying? So he doesn't have to eat all the time, even though he could. He doesn't have to eat all the time, but he studies his prey. When he's not eating, he's studying. And that's what I want us to be like. When we're not eating, we're studying. We're studying our prey. What is the prey? Our prey are these pips. And we need to study this market and how it moves and how it flows and what days it yields a lot of pips and what days it doesn't. The days that it doesn't, we don't need to be in the market. We don't. That's how professional traders trade. They're not in it every day and they're looking at the phone. I used to be like that. You know, sometimes I still have to struggle with that. Looking at the phone at dinner with my wife and blah blah blah. The professionals show up when it's time to eat. Other than that, they are studying the methods of the market. Okay, so that's my goal, to make sure that we all get there. That we are patient traders. I say all the time, either you're going to wait for the right entry or you're going to wait and draw down. But either way, you will wait. Okay, so we might as well wait until to the proper moments when things are in proper alignment. Then we can strike like that alligator and we can eat every time. Okay, so that's our goal tonight. So I want to share with y'all just a couple of things of our ideals of what we want to focus on. Okay, so can you all see that? Y'all, can y'all put a 3 in the chat if you can see that?
Yes, we can see.
Okay, awesome. So before we look at any charts, and I will post this to the group, we want to make sure, guys, that we have agreement before we jump in. Okay, and I know this is a long list, but I'm telling you, this long list will save you some misery. Okay, so we all know that the 415 strategy is a reversal strategy. Okay, what does reversal means? It has to reject a level of structure. Okay, so this is the first thing we're looking for. If we don't see this, none of this applies. Okay, so let me get my annotation out here. Okay, if we don't see this, then we don't even I don't want to get too country. We're not even going to study that, right? If we don't, this is step one. Okay, now after we see structure rejecting, then we have to see a simplicity arrow on what we call the local time frame. Okay, now here's what I mean by local, and this is the reason I'm talking in terms. I want to talk in these broad terms. Notice I'm saying higher time frame, and I'm talking local time frame. Okay, because what I am discovering through my back testing, and I'm working on other things on a video that I think I released over the weekend. This same higher time frame rejection getting on lower time frame works not only on 415, it works on the daily and the 1, it works on the 30-minute and the 5, it works on the 15 and the 5. So that I'm not going to tell you guys how to trade. We're starting our bread and butter. Our nucleus is 415. Okay, but you may say, hey, you know what, I'm a scalper at heart. And so I like the smaller time frames. I want to get in and out. I don't feel like, I don't have the time to wait all day for something to play out, even as a day trade. So, okay, well, a 30-15 may be the one you need to, a 35 or a 30-15, where you're getting it on the 5-minute, you're getting quick pips, you're getting a quick 20 and you're out. Okay, so we're referring to these broader terms rather than saying a 4-hour and a 15, but whichever applies to you. And we're talking initially based on 415. Okay, so rejection of the higher time frame structure. Okay, a simplicity arrow on the local time frame heading that same way of rejection. Okay, so if you have a 4-hour rejection of resistance and it's going down, okay, you don't need to get in an arrow that's going up. That's not agreement. Somebody's going to win, and guess what? The higher time frame is going to win. Okay, so the next thing is the short term and the long term trend surfers are in the color is in the desired direction. Meaning, if I'm let me stop sharing this for a second. I'm gonna share. Oh, hold on, I don't have it up. Give me 1 second, y'all. I shut my thing down. Give me 1 second, guys. Okay. Okay, can y'all see my chart?
Yep.
Yes.
Okay, great. So this is what I mean by you want, let's look at this this upward move right here. Okay. We had let me zoom out. All right. So you see right this. See right here. I'm gonna highlight this. If you can see right here, this orange arrow represents 4-hour structure that was rejected. Okay. You also see right here, I'm gonna zoom in just a little bit because I know this is small, guys. I apologize. All right. As you can see right here, we have an arrow that is going in the same direction. So we got it's rejecting 4-hour structure, meaning it wants to go up. The arrows are telling you we have to have an arrow that's going in the same way. Okay. Also, this is number 3 on the checklist. This right here is the trend surfer. Okay. Both the short term, this is the little skinny one. Let me separate them a little bit. This little skinny one, this is the short-term trend. This is the long-term trend. Both of them have to agree with the bias that the other two have just told you. 4 hours saying I want to go up. The local time frame says I want to go up. Okay. The trend, and as a result, the trend surfer, both trend surfers should say green, meaning going up. If you've got one like this that's red and green at the same time, that's not agreement, guys. Okay. We don't have agreement, we don't get in. Okay. So let's go back to the list here. And let's go with our checklist again. So we got rejection of higher time frame structure. We've got simplicity arrow going in the same direction. We just saw that the short term and the long term trend surfers, the color is going in the desired direction. And that in that scenario, it was going up. Okay. The next thing is the oscillator has broken the 0 line into the color matching the desired direction. Okay. Let me share this with you so this makes sense. Uh-oh. Okay. This is the oscillator. Okay. Can everybody see my chart?
Yes.
Okay, great. All right. So this is the oscillator. Okay. What this oscillator does, and let me get rid of it. Oh, no, I ain't gonna get rid of that. What this oscillator does, it measures structure. So when it broke structure, you see right here, and this line here, change color. there's an imaginary line here. And I need to change this to, I can't do it, I'm sorry. Y'all can see this little red line. This is called the zero line. When it breaks this zero line, that means it has gone from bearish, which means red. And right now this is blue, but normally it's green. This is just another template. When it breaks this line, it means that it has gone into bearish territory. It has broken bearish structure and it's going bullish. Everybody see that?
Yep.
Yes.
Okay. So this is another area that we need agreement in. So y'all see how we're building a team that is all pushing the same way. Okay. It's like an offensive line. I never played football, but I understand football that, you know, when an offensive line is pushing, they need to get penetration over into the defensive end of the field. So everybody has to push the same way. Okay. And so now we got this going up. We got this same one going up. We got this same we're going up on the short term. We got this same we're going up on the long term. And we've got the oscillator saying, hey, now I want to go up too. Okay. Notice the movement of this pair, and I'm trying to get it to expand up a little bit so you can see a little more clearly. Okay, great. The movement of this pair is kind of flat. It's moving a little sideways. It's because the pair wasn't really ready yet. And there's a last piece to why it wasn't clearly ready yet. See, all these things kind of lined up right here. I'm gonna draw this vertical line right here. All these things kind of lined up right here for a hot second. Notice, see this? It was green right here, up, green, green, and this was bullish structure, okay? But as you can see, as I move this over, then the short-term trend got red again. Like, hey, what's going on? Well, there's a reason why it wasn't ready yet. This is what we call, this is consolidation, y'all. Or what Uncle P calls SpongeBob SquareHead. It can't make up its mind. You know why? Because there is a battle going on between buyers and sellers. So they'll go up some, they'll go down some. They go up some, they'll go down some. You see what I'm saying? And so this is the reason why price never goes somewhere. If you notice, it stays in this box. It's going sideways. Price either goes one of three directions, up, down, or sideways. And in this case, it's going up, going down, going up, going down. Okay. So let's go to our next qualifier. Okay. Okay, we got rejection of structure, simplicity arrow. So on the higher time, on lower time frame, the short-term and long-term surfers, trend surfers are the same color, going the same direction. The oscillator has broken the zero line into the color matching our desired direction. The momentum line, okay? Now I'm going to add this on here because again, this template is not the right one, but we're going to get it on here right quick, okay? Can y'all see the chart?
No.
Okay, hold on. Thank you for telling me to. Hold on. Want to share remote desktop. Can you see it now?
Yes.
Okay, great. So what we need to do, we need to grab the momentum line, and I'll get everybody set up. Okay. Change this to white. We're going to change the thickness to about 2 or 3. And now we see this is telling us where momentum is going in the market. I put it on top of this because we can clearly see green and red, and so as to not to add another pane and window, okay? So right here, when this came in, yeah, it was squiggly, it wasn't really committed. This is a minor level of confluence, but as you can see, it's going teeter-totter, okay? And so you want to see this, it needs to be going in a general direction. It doesn't necessarily have to be high, but it needs to be going in a general direction going up. Okay. As you can see right here, it was going up, but all these things are saying going down. So we don't see agreement. We don't get in when there's not agreement. Okay. So let's go to the list one more time. All right. So again, and you all will have this, okay? So you can print it out or you can put it on a PDF on your computer, whatever you want to do. The momentum line needs to be going up as well, okay? The algorithmic trend line has to match the color of the desired direction, okay? Now that's a funny name for just the smiley faces. Everybody calls them the smiley faces, right?
Right.
We want to, I'm sorry, let me share. I didn't hit share. I'm clicking and not sharing. Y'all can see now, right?
Yeah.
Yes.
Okay. These smiley faces, and we zoom in, there are a bunch of little smiley faces all together, okay? They need to be the same color. Y'all, this system is very, Uncle P said so easy, your child could do it, kids could do it. Kids know how to match colors. And that's all we need to do. This also needs to match the same direction. It needs to tell the same story. Your mama used to say everybody ain't telling the same lie. If everybody's saying the same thing, there's some truth to it somewhere. You see what I'm saying? So 4 hour is saying going up. This is the 5 minute, but same difference. Up, green, green, green. We don't have green or bullish right here, okay? So this is the last thing we need for agreement, y'all. And when I say reason I put these things in this order is because there is a specific order to it, okay? They will show up and manifest in different levels of order, okay? So this last one is, let's go through it again. Rejection of higher time structures, simplicity arrow, local time frame, going in the same direction. Short-term and long-term trend surfers are the same color of the direction that we're going. So if it's bullish, it needs to be green. If it's bearish, it needs to be red. The oscillator needs to have broken the zero line into the color matching the desired direction. In this case, it's bullish, so it needs to be green. The momentum line doesn't need to be going down, y'all. It needs to be going up, right? The trend line, the smiley faces, they need to be the same color as this trend line, the same color as this oscillator, going up, okay? If it up is bullish, going red if it's bearish, okay? And the last thing is this same trend line needs to have crossed the 50 smooth moving average in the desired direction, okay? I'm gonna show you that. Close this, share screen, remote desktop. Boom, y'all can see it, correct?
Yes.
Yes.
Okay, great. So the reason that this stuff teetered and tottered and all this stuff is because this trend line never cleanly broke this 50 moving average. This white line, this is the 50 smooth moving average. As you can see, it hadn't broken right here, so I don't trust it. It could turn on me at any point. Excuse me, y'all, it's so close. Now, had it broken yet? No. Had it broken yet? No. Had it broken yet? It broke it right here. But do we truly have agreement yet? Let's look and see. We already know this stuff agrees. Let's back out a little bit. Okay. We know that this agrees, right? Up, up, green, green, green. It's kind of flat. It's kind of non-committal. Does everything kind of match there?
Yeah.
Yes, to
Yeah.
yes, to a degree, but guess what, y'all? It's not firm. It's not a lot of volume here. So this is the reason we would not fool with this, because this is what consolidation does. It tricks you into thinking, oh, this thing about to go. But as you can see, when it came back and retested, it went back under, and it went over, and it went under, and it went over and went under. Versus, look at this. Now this is another one that came in. Let's read this story. Now we already know it rejected 4-hour structure, so we don't need to see another arrow here, because we know back here just, you know, maybe 20, 30 candles prior, we know that this already exists. Okay. All right. So now we're letting simplicity tell us a story. Okay. So y'all just unmute. Somebody tell me what we see.
What you see is a gradual increase. When you talk about where you are highlighted or where it started to go up.
Right here, and not the candles.
Okay,
but, so hold on.
The white
let me make right. So we see a white arrow, right?
Uh-huh.
So that means we're going to go up. So Todd, that's good identification. Somebody else give me something.
Across
And
the,
also,
Yeah, across the smooth 50.
yeah.
Yep, we had a cross of the 50 smooth moving average. That's David. Very good, sir. Who else? Somebody.
You see a short-term and long-term surfer lining up green?
Yes, right here. Short term, long term. That's correct. Somebody give me something else.
up under the short term, long term, you start to see a trend going upward in the wave between the where it's blue at. Yep, right there.
Right there. Awesome.
Yep.
Okay. Somebody give me is one more we missed.
This is Maurice. The momentum, right?
The momentum, right? Are we pointing up with the momentum at this point?
Yeah.
Not
really.
quite.
Well, here's the thing, and you got to remember now. We are looking at back tested data. Okay, so at the point where you would take a trade, you don't see none of this.
Right. Okay.
You see what I'm saying? So you kind of gotta have to use your imagination a little bit. At this point,
It
where
was
this
going
line
up.
is going up. Okay. If I could see back in time like this, we all be billionaires, right? But we just can't. We just don't have that luxury, right? But at the time where this would came, you wouldn't have seen any of this. It was pointing up. Okay. So technically, it met the definition. Y'all understand?
Yeah.
Mm-hmm.
Okay, so to be honest, this is a point where technically everything worked to get in. All right, so
Can I ask a quick question?
yes,
All right, I'm looking at it and everything matched up, but my question would be, would we need another 4-hour rejection because we had from the first one that we saw, we had an arrow going in the opposite direction? Would we need that to reset, or we just play it like this because it's still in that same level? Okay, and I do see that it extends all. Okay, it extends all the way across.
it extends. Yes,
Okay,
and
gotcha.
that's the beauty about it. That's a great question, Dwayne. It extends over. So what I didn't tell y'all that this white one, this is the daily. Okay, so these are the ones you really want to get in. Okay, the reason you want to get in these is because now we got the 4-hour pushing this way. You got the daily pushing it. These are the two strongest. When they're together, it is a powerhouse. Okay, so so that was a good question. Do we need it to reset? No, we don't. Because if you do that, then you might be waiting 2 days before it resets.
Get a hit.
You know what I'm saying? Because think about it. It takes, oh goodness, 15, it takes 4 15-minute candles to make an hour. Okay. it takes 4 1-hour candles to make 4 hours. So you're talking about 16 15-minute candles to make 1 4-hour candle. Okay. And so you don't have to be that careful, although that's a great question, Dwayne. You don't have to be that careful because the impact of this 4-hour rejection is still in effect. And as you can see, the length of these support and resistance stretches out over the length of these candles. But great question. Okay. So
Got
here, go ahead. Oh, okay, got you. So here's what we can do, guys. What we can do is, hold on. Okay, so what we can do here, once all conditions are met, then we need to start looking for our entry. Okay, we need to start looking for our entry, and we know the errors. This has come in, and so now we need to start looking for our entry. So now here is where I differ from Uncle P. Okay, and I'm not trying to say he's no good and he's wrong. The reason I developed this algorithm is I did not like the width of the stop losses. And I said there has to be a better way to get a safe and closer stop loss. Okay. And what I did, I ended up turning on Simplicity's support and resistance. Okay. So let me show y'all this for those of y'all that don't have it on in your system. Go in your inputs and simply turn on display support and resistance. Turn it on to true. Okay. And the system will let you know areas of structure. Okay. So let's say we get in right here on this candle right here. Y'all see that little short, they call it a doji candle. It's right here, this little short one. Okay. So we're going to get in right there. I'm going to mark it, signified by that red line. Okay. Now, what we want to do, because we're already tight, we don't want to be too tight. Like Uncle P says, he's tight butt stop losses, right? We want to get in right here, and we want to take it safely under the next level of major structure. Okay. This right here says that this is structure. I don't quite trust it. What I want to do, I want to take it under this one. Okay. I want to take it under this one right here. I want to get too close for comfort. So I want to put it under this one because reason being, look how many times it rejected. 1, 2, 3, 4. And on the 5th one, it went up. Okay. So that's a strong level. Okay. This one just rejected once. And so normally I would put it under here, but I don't quite trust it that much. Okay. All right. So I would have put my stop loss there. And based off that one, that line down to there, this is a pretty big one, in my opinion, but we'll trust it. It's 42 pips. Okay. Now, here's what we do. We look to, whenever we are determining what our take profit is going to be, when everybody write this down, we look left. We look to the left to see where price has been before. Okay. When we're determining our stop loss, we look left. All right. So let's find this box. Y'all see these lines here? These are areas of support and resistance. So I feel comfortable in putting the take profit here if I want, because price has been there before. I feel comfortable putting it here because I know it's backed up by the daily and the 4 hour. I feel comfortable enough to put it. Y'all see this one right here? I feel comfortable to put it right there. Okay. when you see people give signals sometimes and they say take profit 1, take profit 2, take profit 3, this is why they're doing it, because they're placing it on levels where price has been before. Okay, so as you can see, if we go from our original line, this is where we would have gotten in. Take profit 1 would have been 20 pips. Take profit 2 would have been 43 pips. I'm sorry, take profit 3 would have been 60 pips. Okay. For those of you that just want to get in the trade, don't want to be in there all day, that trade probably would have took maybe 2 or 3 hours and you would have been out of your trade. Okay. Well, let's say, you know what, this thing on the daily and the 4 hour, I really want to get some good pips out of it. You can go all the way up here if you want, y'all. I want y'all to remember that money has memory. Okay. And as you can see, it hadn't finished going up that high, but guess what? I'm gonna get this out the way. Look at current price action. And it's gotten pretty darn close. So you literally, if you wanted to, and let me undo this, you literally could have taken this original trade right here on this line, and based off where price had been before, you could have trusted this and taken it all the way up here and would have made 202 pips. Now, did you have to go through some things to get there? Yeah, you did. But guess what? You got in at such a good price. You only risked 42 pips and could have gotten 200. That's a 5-to-1 trade, y'all. So if you would have risked $300 on the trade, multiply 300 times 5, you would have risked 300 and would have made 1,500. Okay. And I know that's a long explanation, but that's the reason we go through all these steps. Okay. That's the reason we go through all these steps, to make sure that we have agreement. And when we have that type of agreement, then we can get in with confidence. And that's one thing I want to make sure you all get in when you get in the market. I want to make sure that you get in the market with confidence. Okay. Now, this is the same trade. This is the same trade from the 15-minute. Now, let's see how we would have taken this differently. Somebody has a question? Anybody have a question? Okay, great. I'm getting rid of these just so we can see a little more clear. All right. Now, this is the reason we do it on the 15 based on the 4, not the 5. And that's my apologies. Now, y'all see how things are a little more clear now? There's a little less noise. Look at this. If y'all seen right here, it's the same thing, right? 4-hour rejection, daily rejection, candle. At the point where the candle comes in, do we have any, what somebody tell me what's out of alignment on the 15? I see the things that match. Somebody tell me the stuff that don't match.
The oscillator doesn't match.
Correct. Somebody tell me something else. Anybody, come on.
Algorithm hadn't crossed over the 50 SMA.
Correct. So one more thing.
Is it the trend surfer?
Yeah, it's green at that moment, but you can see right after it.
It's red.
Yeah, see, I don't, and here's the thing, I don't trust the trend surfer as soon as it turns I like to see it mature a little bit, okay? Because it will turn back and forward on you, okay?
Well, the arrow is saying it's a buy, but clearly, it's going south. and
Correct.
it's sell.
Exactly. Because all of this is still a strong downtrend. And that's the reason this is not the optimum location. Hold on. This is the optimum location. Y'all see it?
Yep.
Now everything is in, everybody's singing the same tune. We've got this up arrow still applies. These still apply. Okay. Now the little brothers and sisters are coming in line. We got green. We got momentum going up. We got a breaking of structure. Now it's going bullish. And the last piece of the pie, this has crossed.
Crossed over the smooth 50.
Right. So now all of a sudden, I'm getting in here. Now I'm getting in here. Now, and oh, I'm sorry, y'all. This thing is shifting on me. When I get in here, now, technically speaking, and this is advanced trading, guys. Technically speaking, this cross is so effective, you really can put your stop loss underneath this moving average. That's too advanced right now. Okay. What I need you to do is put it under here. Okay. Put it safely under there. I'd say 35 pips is good enough in case it reaches down. But as y'all can see, when that thing crossed, it never came back. Look at that. 90 pips. You could have took that and been done for the day. Or you could shave off some and let that bad boy run. So like I said, technically right here, and like I said, I am not talking about Uncle Pete whatsoever. I honor the man. He is a genius. Okay. I hope to be like him one day. But the traditional way that the 415 is done is that you get in right here when everything lines up, and they don't even have this. When all these things line up, you get in right here. You put your stop loss 10 pips beyond this. Now look how big your stop loss would have been. That's 105 pip stop loss. I don't know about you, but if my stop loss is 100 pips, I can only get in for maybe a 10-cent lot. Now, did it end up working out? Of course it did, because it didn't come back. But look at all the pips. Even though you still got all these pips, your lot size is so small you can't benefit from it. I mean, I'll take it over losing any day. Don't get me wrong. But y'all see how it pays to wait. And I tell people either I'll say it again, either you're going to wait for the right setup or you're going to wait and draw down. Either way, you're going to wait. You might as well wait for
the setup.
Right. You be like that crocodile. Wait for your optimum entry. You'll have a shorter stop loss. You can get shorter stop loss means you can get in with a larger lot size. Okay. Because I'm going to go through our next things, and then I'm open up for any questions anybody might have, because our risk management is key, y'all. Anybody's been on our previous classes, how much do we risk?
1%.
1%. We only risk 1%. And people that say, why you only risking 1% when the standard is 2 to 3%? You missing out on money. Yeah, I might be missing out on money, that 2 to 3%, but 2 to 3% here makes up for the fact that you got this big stop loss. But I don't have to risk a whole lot because my entry is so tight. And when my entry is just tight, now I can get like $1 lot size, as opposed to getting with this, I would have to get maybe a 20 cent. You see what I'm saying? When if I can get $1, that means with GBP USD, I'm getting $10 a pip. So now this same 97 pips is $970 versus if I had 100 pip stop and if I can only get a 20 cent, that's $2 a pip. So $2 a pip times 81 pips, it's $160. That's nice. But you see the same instrument, if I wait to the optimum entry, it pays you to wait, y'all. You get paid for waiting when you wait for optimum entry. And that's the whole heart and soul of what I'm trying to teach everybody is if you just wait for optimum entry, it rewards you. Anybody got any questions at this juncture?
I just got one as far as your simplicity setting in your on the indicator. What's your trend setting? What setting are you using for the trend for the
For the trend?
Uh-huh.
I believe it's 13, but I might I tweak with stuff all the time, so let me make sure, Dwayne. Yes, it's 13.
Okay. All right.
Good question. Anybody have any questions? There is no dumb question, y'all. We're here to learn. That's why we're here. And I know Bobby, Bobby and Ty, I know y'all don't have the system yet, and y'all getting online this week, and it'll make more sense. But I want to, at least get this visual. Really, y'all, there's no dumb question.
I'll go again, and I know in some of your videos you use it on the indices. This works also on the indices. Indices, correct?
Yeah, let's look. Let's do US 30. That's a monster. I don't fool with US 30, man. Whew. Okay, so let's see. So we didn't even go up on the. So let's do it fresh. Okay, let's go to the 4 hour. I'm gonna let y'all walk me through it. Y'all coach me. Okay, we're on the 4 hour, right? Let's do this one. So Tiffany, talk to me. What do we do first?
So the first thing we need to look for are our rejections.
Okay. So let me zoom in. So do we see 2 areas of rejection?
Yes, we do.
Okay.
Right there. And then we put our little blue box.
The blue box. Okay, now time out. I want y'all to see something. This is another thing that differs from Uncle P's version or the traditional 415. If y'all remember, Uncle P's traditional 415 says it has to be in the box, correct?
Correct.
Okay. As you can see now, 415 is developing off that box up here now, but this was simply a pivot. This was a pullback. It has been an uptrend. Okay. It has been an uptrend. It pulled back and now it's going back up to finish this trend out. Y'all see that?
Mm-hmm.
So I want y'all, I'm not trying to confuse you, but I'm trying to see how I'm teaching it a little different. And these pivot indicators are allowing you to see and capture not only 4 hour, but daily. Y'all see the reason it pushed so hard, y'all, is because the daily is pushing it along with the 4. Okay, that's the reason it's so strong.
Both
sorry?
the yellow and the white lines are arrows are kind of aligned. That is the day.
Yes, the white one is the daily. The orange is the 4 hour.
Okay.
Now,
Okay.
does those arrows, do they come with simplicity, or how do we get those arrows in and plug them in as indicators?
Okay. I do it on your one-on-one, and I set you up.
Oh, okay.
Yes,
All
sir.
right.
Yes, sir.
Okay, got you.
Yep. That's what everybody in the group gets, and that's what everybody y'all don't understand how many emails I get. How do I get those indicators?
That's the sauce, Doc. That's the sauce. Everybody want the sauce to go on the ribs.
That's it. People's like, how do I get that? Where you get that from? And I'm like, mom's the word. Mom's the word. You got to be in the group. Got to be in the group. So yeah. So this is the secret sauce. This is what makes it work. Because it used to be we have to wait until this happened, and that can take days before this happens. But when I figured it, oh, it's happening all the time. I'm like, oh, we cooking with gas now. So Tiffany gave us the head start here. We have highlighted this rejection. So we go down to the 15. And let's see. Let's catch up to where we are. Let me zoom out a little bit. All right, and there we are. Y'all see it? Y'all see that, right?
Got it.
So, hold on, let me make sure. So, Maurice, talk to me. What we doing next?
Okay, we're looking for first the rejection. Second, we're gonna look and see what right entry to make if everything is matching up.
Right. So, remember that order?
We yeah. We want to start looking at the top line. I'm sorry about that. The top green line. Let's see if that's matching. We want to look at the bottom green line to see if that's matching, which it is. But the oscillator is not showing bullish.
Okay. So I'm going to do, I got this from Uncle P, so I'm doing this.
Okay.
Whenever I see this arrow, so number one is we look for rejection. Number two is we look for the arrow, right?
Right.
So what we're going to do is we're going to put this vertical line right here where this arrow is. And this vertical line organizes our eyes to look straight down. Y'all see it?
Yep.
All right. We look straight down. Now we can see, okay, what's going on here? We got an arrow. We got a green trend line. Okay, well, that's good. We got a short-term trend. That's cool. Long-term trend, that's good too. Momentum is up high. I'll take that. But we got two elements that are missing.
Oscillator.
Oscillator is red, right?
Right.
Now, it's ascending, but it has not broken yet. I used to try to catch this. I thought, oh man, this thing going up. Let me jump on this. Man, that thing will go up right here and bounce and take your lunch, man.
Yeah. Yep.
You know what I'm saying?
Every time.
It ain't official till it's official.
Right.
You see what I'm saying?
Right.
And even when it broke, look what it did. It went sideways. It got you dizzy. You see what I'm saying? So
Yeah, but it stayed up though.
right, it stayed up. It's saying, hey, it's still bullish, but it ain't fully committed. Why? Because what's the last element we always look for, y'all?
I get that
250.
50 SMA.
Right. So while this is a decent entry, even if you got in on this entry, and this is NAS 100, so this thing count different, right? You say, okay, well, I'm going to put it back behind here. Dude, look at this. Now, with indices, this thing measures, you got to take the last 2 digits off. That's 129 pips on NAS. Okay? That's huge. And guess what? That ain't as far as you would have put it back. You actually would have put it back behind these two. Given the traditional 415, the way Uncle P teaches it, again, I'm not talking against them. It's just fact. That's the way they teach it, to do it that way. And it ain't wrong, because look, did it ever come back there? No. But you would have had to get such a small lot size. Now,
I see what you're saying. So you go take it back. You don't have to risk as much, and you get a bigger lot size when it goes back up and stays up. When
correct.
It's really committed bullish. All
Right. And the last ingredient is right here, y'all.
Mhm.
That's the thing that brings it all together. Now look how everybody's singing the same song, man.
Mhm.
This carries over. These two carry over. Those are a given. Green. I'm sorry. Green. Momentum high. Oscillator is bullish. Okay. Trend line is green. And they have crossed. And look at this. You could have gotten in right here when this candle ended right there. Okay. And look how small your stop loss is. Your stop loss is just this rounded up 50 pips. Okay.
So when you say be like the alligator, that's a prime example of being like the alligator. Because if you put your money in earlier, you would have lost so many lots that when you did make money, it wouldn't be enough to kind of make up for the lots that you lost initially. So if you waited and got in on that time when it went up and stayed up, you would have had more lots to put in on the uptrend.
Correct. So I'm gonna tweak what you're saying a little bit, but your premise is right. If you would have got now, this is all supposing that you are following risk management rules, meaning that we're only going to risk 1%. Okay. So the question is pertaining to risk management, how are you going to risk your 1%? You're gonna spread your 1% over 150 pips? Or do you want to risk your 1% over 50? You see what I'm saying?
Right.
So quite naturally, you're talking about I can get 3 times as less lot size if I do it here, as opposed to doing it here.
Mhm.
And about 80% of the time, there is no drawdown. So I might have had a 50 pip stop loss, but if I just would have rolled it up to here, this thing went 140 pips.
Mhm.
You could have got out. You could have got out right there and had a good day. Done. Or you could have pinched some off. It would have went back some. But look, it's respecting this trend line, right? It even went down to the 50 smooth moving average, but it respected it.
Right.
You see what I'm saying? And then this thing ended up going. I'm trying to find it. So this thing ended up going. This was the beginning of a major trend. Because guess what, y'all? The daily and the 4 hour were pushing it. This thing ended up going 530 pips. I want y'all to understand, if you get a 10-cent lot on NASDAQ and that thing goes 530 pips, that is $5,300. That's how fast and how powerful indices are.
Question. Now that 500, how many pips was that? Like 500 pips, right?
530 up to the
Okay.
top.
So was that like a 2-day span?
Let's see here.
All right.
Here's a trick. If y'all press Control Y on your computer, you can. If y'all press Control Y on your computer, you can bring up the day separators. Okay. So as you can see, you would have gotten in here on the 20th of July. Y'all see that blue right there? And it went 1 day, 2 day, 3 days. That could have been the only trade you took. And trust me, you put the right lot size, that's the only trade you need all week. But y'all see how you be like the alligator and you wait for the right moment? And what I'm telling y'all, you don't have to trade every day. You just have to wait for the right setup. And you strike, you literally can take 1 or 2 trades a week and be done. I don't want to oversimplify it, but when you wait for the right moment, this is how the institutions trade. You wait till the institutions get in, you let them push your money up. And it's getting ready to start. And look, y'all, I want y'all to watch this week. It's getting ready to happen again. Because guess what? NASDAQ went to all-time highs all last week. It's got to come down. You know what I'm saying? So we're seeing a rejection right now. And when we see an arrow come in, we'll watch it. And it is already giving us levels of structure when all these things fall. A couple things are already in alignment, right?
Mhm.
You got bearish, you got down. This is descending. Now, somebody has jumped in the market. It's getting ready to turn. It's getting ready to turn. Somebody has jumped in the market, and they're not technically wrong, but that is not a safe area to be. As strong as this trend has been, it can make up its mind and say, you know what, I want to go up a little more. And your lunch money is gone. Okay? So look, you see how that thing was red? Look what it just did. Y'all see that, right?
Mhm.
Both of them were red. That thing, you see how it's going back and forth? Ain't no way in the world I get in there with my money now. No way in the world. You see, it's tinkering back and forth.
Right. And you know what? I saw when like the area where the two lowest lows are at the very top, right up under that, right there.
Mhm.
It started kind of being like an indicator to me, like, hey, it's about to be some trouble because you got too many low lows right there.
Right. Yeah, you're right, T. Now that's reading price action. This is an indication that there's about to be a change. This is actually a chart pattern here. It's starting to make a head and shoulders is what it's doing. Head and shoulders these are the two shoulders that's forming, and this is the head. And when this thing breaks the neckline, this is the neckline, then it's going to start going down. But that's advanced. But yeah, that's good recognition. Anybody got any questions? But Dwayne, thank you for showing that, man. So this principle works on pairs. This is gold. I'm going to show y'all gold. And gold has been a little choppy because gold is responding to COVID-19 stuff that's been going on. All right. As you can see, 4-hour rejection of structure. They got red, had a little green, had this. That wasn't the spot to get in. This was the spot to get in. And when it did, made pips. It's about 60 some pips. Okay. So that's pretty much it, y'all. I don't want to overload y'all, but I do want to share with y'all the last little thing that I wanted to share pertaining to, and again, I'm going to post this on the Telegram. These are the 7 areas of agreement. Remember, rejection of structure, simplicity arrow going in the same direction, short-term and long-term trend surfers, the same color of the direction you want to go, the oscillator breaking the 0 line to a color matching that direction. Momentum line is going in that direction. The trend line is matching the color as well. And lastly, the trend line has to cross the 50 smooth moving average, okay? So these are things I want y'all to think from before you trade checklist, okay? And I'm not gonna wax on, but we can pick up with this next week. This is the checklist. Have you done an emotional check? Do not use trading as your therapy. You will lose money. Like, man, she made me sick. I'm gonna trade a little bit. Don't trade as therapy. It does not end well. You want to be clear emotionally. Say, hey, am I frustrated? Somebody getting on my nerves? Am I feeling over happy? Okay. feeling over happy can give you adrenaline. You think you can't lose. Okay, you need to be even keeled. Everything needs to be copacetic. Do an emotional check. Okay, check your internet connection. It has happened to me before, y'all. Stuff done been Bob. I'm in something, especially if you're scalping, and all of a sudden your internet go out or something. You swallow your whole heart and is in your stomach. It's like y'all remember Transformer movie Dark Side of the Moon, where they didn't have any communication. That's not a good feeling. So make sure your internet connection is good. Check market conditions. Is something going on in the world that's got stuff jerky? If it's jerky, don't fool with it. Don't fool with the market, y'all. Wait till things smooth. We want to get in when the market is smooth. Okay. Check your broker spreads. Okay. And we'll get into this a little bit in subsequent weeks. When there's news coming out, brokers will up their spreads. And for those that understand what a spread is, and most other instruments, like if you trade stocks, if you trade commodities, usually there is a commission that is charged. Okay. In Forex, a lot of brokers don't charge commission. What they do, they charge a spread. And this is what I mean by spread. Let's say you want to get in GBP USD. Okay. They will say the spread is 4 pips. Okay. Meaning, and I want y'all to try this when you're in your demo. Just if you notice, if you got a pip counter or something that's telling you a price, every time you get in a trade, you always start out in the negative. Even if the thing is running good, you always start in the negative because the broker gets their spread. And the spread is the difference in pips in current price and what they charge. So if they charge 4 pips, you can be up here, but you're going to start 4 pips in the negative because that's their payment for you using their platform. Okay. Sometimes spreads are wide. Sometimes spreads are narrow. Okay. It's based on supply and demand. If there's not a lot of people in the market, spreads are narrow because they want to entice people to trade with cheaper spreads. If something is coming out, something like news, unemployment news that comes out every Thursday, spreads get wide because there are more people to trade, and therefore they make more money off more people demanding their resources. I don't want to get too much deeper, but that's when I talk about spread. So I want you to make sure you check the spread condition, because there are times in the market, like when the market starts over at 6 p.m. Eastern time, its spreads go up to 20 pips. You don't want to get into a trade and already start down 20 pips. Where you're just trying to get 30. You see what I'm saying? So be mindful of what the spread conditions are, and we will show you how to do that. Okay. And then lastly, before you start trading, check upcoming news events. Okay. And I will put a link in the two major sites that we can get trading information. The first one is Forex Factory. Okay. I think it's forexfactory.com. The other one is MyFX, standing for Forex. MyFX book. Okay. Let me see. Let me stop sharing. This is the last thing I'm gonna share with y'all, and I'll let you see if any other questions somebody may have. Forex Factory. Okay. I'm gonna show y'all. Sorry about that. I'm gonna show y'all Forex Factory. Can y'all see that?
Yes.
Okay. This is the news that is expected to come out overnight. Okay. They're expecting this news to come out overnight. So let's look at tomorrow. What we look for we don't care about a lot of this stuff. We look for red folders, okay? So anybody taking notes, write that down, red folders. We look for red folders. Red folders mean high impact news. So as we can see, and every now and then, I'm gonna drop this in our chat line. As we can see, there's a red folder tomorrow at 10 a.m. for the US dollar. So this is how we read it. At 10 a.m. on Tuesday, July 27th at 10 a.m. for the US dollar, there is a high impact news event coming. This is consumer confidence. That's how much this is a measurement, I think, that's measured by the Department of Commerce. How much confidence is the consumer having? This is a large, very important marker as it pertains to the economy and spending. Okay, so here's what you would do with that news. Tomorrow at 10 a.m., you don't need to be in. There are people that only trade news, y'all, because the news brings high volatility, and some people they do what we call a straddle. They put a sell on top of current price. They put a buy on top of current price. They put a sell on the bottom, and whichever way price breaks, they make money off of it. Some people just trade news. That is a highly skilled and highly volatile way to trade. Please don't try it. But tomorrow, if you're in a US pair, anything that has USD in it, I would recommend that you get out of it 30 minutes prior to this happening. Okay. If you're not in this pair, I don't recommend, if you see a good setup, do not get into this pair until 30 minutes after this time. So y'all get it? It's a 30-minute buffer on each side of this time. If you're in it, get out of it by 9:30. And if you're not in it yet and you see something you may like, don't get in it until 10:30. That makes sense, guys?
Yes.
Because what the market makers will do, they will spike it up. I wish I had somebody can show y'all a news candle. Anybody ever seen a news candle? It's literally a candle. I'm going to draw it on here. It's literally a candle that will look like, let me change color. It will be like this, and it'll have a body that look like that. That's what we call a news candle. It shot up real high. It shot up real high, and then they brought it down. So if somebody was up here and they bought it right here, guess what? They pulled the floor from under you and brought it all the way down there, and you lost all that money. So that's the reason you don't play with news, y'all. And so I want y'all to check this every day before you start trading. Check news. I'm not saying you can't trade that pair, but wait until the news passes, because what ends up happening is it will spike. People will jump all in the market, and then what ends up happening is the market returns back to its normal flow. It'll be going like this, and then it'll shoot up. It'll come back down, and then it'll resume its flow. And what you want to do, you want to get back in after all this craziness happened. Get in right here and then get back in the flow. Okay, so you get out before it, and you don't get in until it's over and done. Okay, and when you do that, then you'll stay away from that. But it will happen, particularly at nighttime. New Zealand pair, I mean, wicked spikes.
Woo. They had you butt naked and bruised out there in the street.
Yeah. So, like, what happened? I was in profit. What happened? What happened? What happened? What happened? So y'all, that's all I have. I'm going to upload both of those things up. I'm also going to, I'm gonna go ahead and stop the recording now, because